Hello everyone and welcome back to G2's weekly market update. Your sharp, smart and global look at what's moving markets around the world. Let's dive right in. Starting with the United States. Wall Street closed higher this week, brushing off the government shutdown that began Thursday. In fact, stocks thrived in a bad news is good news settling, with ADP reporting a surprise loss of 32,000 private sector's jobs in September. Investors grew more confident that the Federal Reserve could cut rates at its October meeting. Tech led the way, with the Nasdaq outperforming, while small caps also shined. The Russell 2000 surged as lower rate bets fueled optimism. Meanwhile, commodities told a different story. Oil tumbled over 7% after OPEC Plus signaled more supply, but gold and copper both jumped, extending their strong year to date runs. Treasuries also rallied, with yields falling across maturities as weak labor and consumer confidence data added pressure. Investment grade corporates outperformed, while demand in the high yield market stayed solid despite busy issuance. Over to Europe. European markets had a strong week, with the STOXX 600 hitting record highs on hopes of the US, rate cuts, and a rally in tech. Germany, France, Italy, and the UK all posted solid gains. On the economic side, Eurozone inflation ticked up to 2.2% in September, but ECB President Christine Lagarde described risks as quite contained. Unemployment edged slightly higher to 6.3%, though consumer confidence improved. In the UK, mortgage approval slipped modestly in August, but house prices managed a rebound, hinting at some resilience despite higher borrowing cost. Now to Japan. Markets in Japan ended mixed. The Nikkei gained nearly 1%, while the broader topic slipped. The yen strengthened to around 147 per dollar, helped by US political uncertainty. Meanwhile, the 10-year JGB yield inched higher to 1.67% as the Bank of Japan reiterated its readiness to hike rates again if economic conditions align. Governor Ueda suggested that another move could come before year end, especially after business sentiment improved in the latest Tankan survey. And finally, China. Chinese markets closed higher in a holiday shortened week, with the CSI 300 and Shanghai Composite both advancing before the start of the Golden Week celebrations. Hong Kong's Hang Seng surged nearly 4% as investor sentiment improved. The 8-day holiday is expected to drive a surge in consumer spending, from travel to retail, offering a critical gauge of household demand. On the data side, manufacturing PMI ticked up slightly to 49.8, though still in contraction, while services PMI slipped to 50. Overall, the numbers highlight that momentum in China's economy remains fragile heading into quarter 4. G2 takeaway. This week underscored how policy and politics are driving markets as much as data. In the United States, a government shutdown and missing jobs report complicated the outlook, but weak labor data boosted rate cut bets. In Europe, inflation is inching higher, yet policymakers remain calm as markets celebrate new highs. In Japan, a stronger yen and steady inflation outlook keep the Bank of Japan leaning toward another rate hike. And in China, Golden Week spending could be crucial test of consumer strength amid ongoing factory weakness. For investors, the message is clear. Stay alert. Policy moves, not just fundamentals, are setting the tone this quarter. And that is your G2 weekly market update. If you found this helpful, do not forget to like, share, and follow us for more sharp global insights. Let us know in the comments, will Golden Week spending in China surprise to the upside or fall short of expectations? Thanks for watching, and we'll see you next week.